Hello, I'm David Chaston of 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news of pressures building up in all the major economies. In Washington, the negotiations for raising the debt ceiling are not going well. The President's not shying away from letting the federal government shut down in mid-August, calling the prospects a good shutdown, and that sentiment was echoed today by his Treasury Secretary. Markets will start to take more notice of this game of chicken soon. This adds to risks, because with the world economy improving everywhere at the same time, there is now suddenly a shortage of safe haven assets, and that leaves a dangerous reliance on US Treasuries. And with an unstable White House, that danger has only increased. Perhaps one marker for this new risk is corporate CDS spreads. The US version is now at its lowest in almost a decade, and since before the GFC. Other than this imbalance, there seems little reason for this pricing to be so low. And imbalances have a way of correcting themselves in an unstable way. The pressure is going on the Chinese financial system as well. A stubborn anomaly in China's 1.7 trillion government bond market has worsened, as an odd combination of tight funding conditions and economic pessimism is pushing long-dated yields well below returns for one-year bonds, the shortest dated government debt. It is a situation unseen since 2013. The yield curve inversion first surfaced a month ago when the yield on less actively traded 5-year bonds broke above that 10-year bond level. The anomaly deteriorated 2 weeks later and took on a rare new form, with the yield in the illiquid 7-year bonds rising above both the 5 and 10-year paper. The inverted yield curve usually reflects investor pessimism about a country's long-term growth and inflation prospects. On the other side of the world, pressure is also going on in London as a financial centre. The EU is about to end its right to clear euros. Clearinghouses are a key part of the financial system's plumbing, with trillions of euros being handled every year, mostly out of London. The Brits have done little negotiation since they triggered Brexit, and Brussels isn't waiting around for them. The separation without an agreement is not unthinkable now. Britain is about to get the full consequence of its actions. In New York, the US Treasury 10-year yield is unchanged at 2.21%. The price of oil is little changed today, with the US crude benchmark still just under $46.50 a barrel, while the benchmark is just over $48.50 a barrel. The price of gold will start also unchanged at $1,267 an ounce, and the Kiwi dollar is unchanged as well this morning at 72.3 US cents. On the cross rates, we're at 95.9 Aussie cents and 64.5 euro cents. The TWI is at 76.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.